Good morning, ladies and gentlemen. Welcome to the Flow Show. It's NFP day. Hope you got your guesses into the NFP competition. If you haven't, you should have. I'll just chuck the link in to the chat while we're talking. There we go. So get on board with the NFP competition. Get your guesses in. Win some wonderful prizes. Free coaching lesson from the team here at ForexAnalytix. 30 days on our platform. Free live squawk, free peak suite, a ton of prizes. So get on board with that one. Last chance to get your guesses in before the big number later on. Also your last chance to take part in our sale. Get a good deal. Once it's gone, it's gone. And then it's tough luck. So some great prices on offer there. The best time to get stuck in the latter part of this year when everything happens and get set up for the new year as well. So take part in that. Right, let's get on to what's going on around the world. It seems that the folks in Japan, the government folks, are still watching tick charts on the Japanese yen because they're feeling the need to continually come out with comments about what they think and what the BOJ has told them and what it's going to do. It's really getting to a point now where it's almost as if they're scared of market moves at the moment. But anyway, PM Ishiba says the government intends to continue working closely with the BOJ and do the utmost for an early exit from deflation and achieving sustainable economic growth. He's also speaking about what his plans are for the country in general. Says we'll seek a constructive, stable relationship with China and other partners. Is also aiming for Japan to become an investment powerhouse. Big talk of deflation. The main stance from Ishiba is that he wants to finally get Japan out of deflation. So everything that he's talking about, the domestic economy, is with that aim in mind. His economic minister, Akazawa, again speaking about the Bank of Japan, has said that Ueda says that monetary policy is still very accommodative. They say, broad terms, policy rate of 0.25% is an accommodative state. He said the timing of monetary policy change is important and must align with Japan's broader goal of exiting deflation. It says they will carefully consider the situation on gas subsidies. This is something that fiscal measures that they've been doing as oil prices, gas prices have gone higher. They've put in subsidies for the population to keep those costs down. They were due to end, but they keep getting extended, and it looks like those might get extended again too. We've been talking recently about the RBNZ and rate expectations. A Reuters poll is now seeing 17 out of 28 people polled looking for a 50 basis point cut, which I feel is a little bit overdone. I did a bit of looking and checking yesterday into various RBNZ comments from the governor, the last statement, etc., and there's been nothing to suggest why they should suddenly start going 50s over 25s. There are pros and cons to it, them doing a 50. The pros for them doing so are that rates there are still fairly high at 5.25% compared to what's going on elsewhere. Their inflation measures are at target, and they are worried about some economic growth. But on the other side, they've clearly said that they will take a slow and measured approach to ending restrictions. They've also said that the reason for rate cutting is to remove restrictiveness, not to inject stimulus. So that's another key reason why they may not go 50. But, you know, this is central banking for you, and we weren't expecting the Fed to do a 50, and they went ahead with it. So can't rule it out, but I think for now, and I'm looking to trade it that way, I see the RBNZ expectations maybe tilted a little too much to the dovish side. A bit of data out this morning in Europe, not a lot. Obviously, everyone's waiting for the NFP later. So, we're not doing. So we're treading a bit. Oh, for crying out loud, we're treading a bit of water at the moment. Let me get that back up. Boom, boom, boom. So in Europe, we just had some industrial production bits and bobs. France saw a decent rise, 1.4%, 0.3 expected, up from 0.2 previously. Spain was a little bit softer year on year, anyway, down 0.1%, was expected to rise 0.1%. Month on month, it also came in at minus 0.1%, so a little bit negative there for Spain. Some construction PMIs there, which no one really pays attention to. Some improvements, some going backwards, all still in contraction there. We've had Bank of England's chief economist Peel speaking this morning, and everyone was waiting for this one, especially after Bailey's comments yesterday took the hatchet to the quid. He wasn't as dovish as Bailey was. He said there's ample reason for caution in assessing the dissipation of inflation persistence, i.e. still sees things a bit sticky. He says there's a need for such the need for such cautiousness points to a gradual withdrawal of monetary policy restriction. So he's in no rush to cut rates. He says further cuts in the bank rate remain in prospect, but it would be important to guard against the risk of cutting rates either too far or too fast. He says, I do not think the level of interest rates is having more than a marginal impact on UK business investment, i.e. rates aren't stymieing investment that much. So not as dovish as Bailey, typically. We have seen the pound recover a little bit, though not hasn't undone all the work that it did yesterday. If, as you can see there, if we take a look at cable, bounced off from 130.90s, it's crept high ever since. Not too much of a move back up on Peel's comments, but it's not going down, I think, is the main theme here. Maybe taking a bit of a pause for breath, as to say, ahead of the NFP. Euro sterling as well, that has come off from those highs. They looked very overdone up here. Not overdone enough that I wanted to flip my longs to shorts, but nevertheless, it has tipped back a good 60 pips. Just need to see where it settles from this point. But I'll look at these in a bit more detail shortly. Back to the data, yesterday's data. Initial jobless claims out the US, no change there, nothing to see there. Numbers still ticking along in the 200s. Wake me up if we're seeing 400k numbers there and continued claims in the 2 millions, over the 2 millions. Then we'll have something on our hands. Challenger layoffs, that came in at just under 73,000. So another 73,000 layoffs announced in September following the near 76,000 last month. So these numbers are running quite high at the moment. Just in the comments, they said that layoff announcements have risen over the last year and job openings are flat. But they did say that seasonal employers seem optimistic about the holiday shopping season. That's been borne out by Amazon. Depending on how you want to take it, they plan to hire 250,000 seasonal workers, pretty much the same as last year. So you can look at that in two lights. One, that they're looking to hire as many as last year, or another light that they don't need to hire more than last year. So maybe business isn't going to be better than last year, but still, this is a funny period for a lot of things coming into the US holiday season, Thanksgiving, Christmas, and the like. There's a lot of holiday hiring that can have an effect in the jobs numbers. So it's just something to bear in mind. Not so much for this report, but probably from the October report onwards that we get next month. Sticking to the data, then we had the PMIs coming out, starting off with Canada. Is it on there? No, Canada's not on there. I don't like to put Canada on there sometimes. Anyway, Canada's PMI came in a little bit softer. Services 46.4 versus 47.8 previously. The final S&P number for the US came in a touch softer, 55.2 versus the flash 55.4, and down from last month. Then the ISM, and here we are again, just when the market's getting all bearish over some of these numbers. We got a very, very hot number, 59.9, an absolute boomer. New orders boomed. Sorry, that was the business activity. The headline number was 54, still a boomer. Prices, they boomed as well, 59.4. The only thing that was negative, as you can see there, was the employment number going into contraction. Was expected to pull back a bit to the 50 mark, but it actually went negative. Pretty much following what we saw in the ISM manufacturing number earlier this week. So maybe I'm sensing maybe some skew in these numbers as well, whether it's weather related or whatever. So hasn't really materially changed expectations for NFP today. But we'll keep an eye on it anyway, see what happens next one with that. But otherwise, very strong data, very soft landing data, more data that potentially makes a mockery of going a 50 pip cut instead of a 25. But Fed's going to Fed, as we like to say. Our mate still listening from yesterday, Joe from yesterday. Feds are going to Fed. Speaking of Feds, Feds Goolsbee says a 25 versus a 50p BP cut is not as important as getting rates down over the next 12 months by a lot to get rates to neutral. Then he played a bit of word salad. Let's see if I can get this right first time. There has been a partisanization of consumer confidence readings, making them less informative for consumer spending, whatever partisanization means, no idea, but that's what there's been in consumer numbers, and it's confuddled him. Yeah, Gavin, exactly. Sounds like horse shit to me too. What I did miss out was the factory orders data, which came in a little bit softer as well, month on month, stripping out some of the big stuff like transportation, also down 0.1%. Durables, all pretty much coming in unchanged, so nothing to note there. Over at the Bank of Canada, they're going to employ or want to employ or appoint another board member, an external deputy governor. That would take their board, I think, up to 9 from 8. So this is for their monetary policy meetings. They want another external person to add to that, another voice to put into the mix of monetary policy meetings. It's all well and good. Now you can all, don't go out rushing for bog roll anymore, Americans. And those of you who rushed out and bought 200 packs of toilet roll, well, you can build a house out of it, because apparently the dock workers have agreed. There's been two lines from this one. They've agreed to suspend the strike until January 15th. Another headline saying they've agreed a pay deal. Whether that's one and the same or they've agreed a temporary pay deal till the 15th of January, I don't know. But it looks like that's coming to a quick conclusion. So there shouldn't be too much knock on. As I said, all you long bog roll holders, you're holding the bag now on an offside position. Usual clown show, circus show in Europe. Today was a day they were voting on EU tariffs. Some of the numbers coming out originally said that it passed, and then we got a headline saying that EU countries hadn't voted clearly for or against the Chinese tariffs, and it's been punted to the European Commission. And then just before the show started, the EU Commission says that the tariffs on China's EVs have gained the necessary support. This has been a bit of a foregone conclusion. They were going to vote to impose tariffs. Just as usual, they make an absolute shit show of doing so. We've had various people obviously coming out and moaning since then. Germany obviously heavily against that move, considering obviously talking their book and how tied up they are with the China auto industry. Volkswagen has been out as well, saying EU's China EV tariffs are the wrong approach. Again, all book talking there, obviously. But this is the political way of things at the moment, particularly with China, and it's not just about EVs. This is part of the broader battle going on with China. Over in Mexico, new President Sheinbaum says that their wage rise proposal is going to see a 12% hike next year. So wages up 12% next year, which is obviously potentially inflationary. Might explain why the Deputy Governor yesterday said that rates are going to stay on hold for a while. I'm joking, of course. They wouldn't hold rates now for something happening next year, but still, that's something that could play into economics in Mexico next year. The old biddy, President Biden, was throwing markets around yesterday afternoon. This is a bit of a Bloomberg special. They said they dropped a headline saying that Biden was discussing Israel striking Iranian oil facilities, and just the way it came out seemed to insinuate that the US would be part of that or would be looking at that situation, which was not the case. This was all just more so about discussing what Israel may do, rather than discussing with them what they're going to do. So that was a bit inflammatory for oil and risk trade yesterday. Later on in the evening, he dialed that back a bit, sort of, saying someone asked him if he's urging Israel not to attack Iran's oil facilities. He said that he won't negotiate in public, so decided to keep his mouth shut that time. If you work for HSBC, you might not get a Christmas party this year. Apparently, they're going to scrap some internal events and restrict travel in efforts to cut costs. So things are belt tightening there at HSBC just before Christmas. So that'll be a worry for workers for bonuses and other related bits and bobs. So banks tightening their belts is never a good sign. It just maybe hints at possible issues. They're not making as much money as they would like, which is not something you want to see if you're talking about economies doing well and soft landings. So just something to keep an eye on there. If you start getting banks cutting jobs again, particularly in the UK, then maybe all is not well, and that won't bode well potentially for the next earnings season. That's it on all the headlines for now. What we're going to do is have a quick look at the NFP stuff coming up, just so you all know how to play it, what to look for. It's the same old, the usual things apply. Okay, the headline number expected to come in at 147, so around about what we got last time, 142k. Unemployment rate set to come in unchanged at 4.2%. Participation rate last time was 62.7. So you should know by now how to play this. Obviously, the market's going to make an initial move on the headline number, be it a big beat, a big miss, or coming in roundabout in line. Really now, the important factor is switching more to the unemployment rate, given that the Fed themselves see it, I think 4.4% by the end, end of next year. So there's not a lot of wiggle room there, 4.2 to 4.4%. So if we get a big move here, particularly if we get up to 4.3, 4.4, that's going to be a negative reaction. Does it mean we're going to get another 50? Not necessarily, but it's probably going to get the market running that way once more. So it really could go either way. You've obviously got to then judge the participation rate in terms of what happened with the unemployment rate. If that goes up to 4.3%, but that participation rate goes up to 62.9%, then it doesn't make that 4.3% look as bad. It means more people have come into the jobs market looking for jobs that now, while they're looking, they're clarified as unemployed. Because if you didn't know, in the US, you have people in the jobs market and people out the jobs market. So those not looking for jobs, they don't make up part of the unemployment. So they could be unemployed, but unless they're registered unemployed, they don't fall into the unemployment number. But if they suddenly join the market again, come looking for a job, register as unemployed and looking for work, they then appear in this number. That's why the participation rate is so important when judging what happens here. So a really good number would be that coming down and that going up. participation rate going up while the unemployment rate comes down. That would be a good number signalling jobs growth, decent jobs growth. Obviously, on the flip side, if that goes up and that participation rate comes down, then that's an even worse number. So always make sure you keep an eye on that one. Wages is the next thing as well. That has been coming down year on year, average hourly earnings. It was pretty sticky around 4%. It's not really coming down an awful lot. So it's still quite sticky, still quite hot in the wages front. I mean, it's, you know, you don't expect wages to come down to 1-2%. It hasn't done that for quite some time, but keeping up here around the 4% area keeps it pretty sticky. If it ticks up today, 3.9, 4%, that is a bit of inflationary. Again, that's something the Fed will maybe stay a bit more restrictive on in terms of rates, and then that will push things back to the 25 pip cut side. Now, remember, overall, okay, and I'll keep repeating this, and I'm going to keep repeating it. I don't care if I say it 1,000 times. The Fed want to get rates down, okay? Even if we get good data today, unless it's bamboozlingly hot, wages at 4.5%, unemployment at 3.9%, something really stupid, 250k plus headline number, unless it's really, really hot numbers, okay, and it's a trend of really hot numbers, the Fed are going to cut rates irrespective of what this does. All the market's going to do at the moment is play whether it's going to be a 25 or a 50, that usual game. So any decent numbers here, you know, a 180, unemployment unchanged or dip into 4.1, something like that. Any positivity, dollar rallies, yields rally, or yields go up, is still likely to be something that will run into sellers because the Fed will continue cutting. They may cut a bit slower, but they want to get rates down. So whatever data you're looking at, whatever data, US data you're trading, have that in the back of your mind. The Fed want rates down to a neutral level. They don't want to keep rates up here for too long, because then the longer that it stays up, the more or the worse effect it will have on the economy. Not that it's done so already, but we've seen some tepid signs of weakening economy. So keep that in the back of your mind when trading it, what the Fed wants to do versus what the data actually does, because it just gives you your bias. Okay, I'm more a rally seller in the dollar on any decent strength, particularly following yields, because I still think that getting yields, particularly in the short term, like the 2 years, yields up. Oh, let's get a decent time frame. Yields up around here, 3.8, 3.9, will be a little bit too hot for me. Okay, and that sort of level, your bond traders are going to be coming in and thinking, well, if the Fed wants rates down to 3% or whatever, neutral level, and that's going to happen over the next couple of years, well, then yields at 3.8 is an opportunity. Okay, so just have that in the back of your mind. And I'm using yields a lot at the moment as my guide for what the dollar may do. Yeah, this could bounce up today. Yes, the dollar could scream up. Dollar yen could go to 148, 149, 150. But if we start getting into levels where I think, okay, that's enough in terms of where I think rates should be going and yields should be going, then I'm going to think about counter trading, because if we do get a top in yields, you're probably going to get a bit of a top in the dollar, because the Fed are still going to cut. 10-year yields as well, 390 up towards 4%, I think is going to be too tempting for a lot of bond traders, and so they will be piling into there when yields get up that high. So they'll be buying bonds up there. So again, this is probably going to be my main guide for what I do with the dollar. Right, so that's all the data. If you've got any questions about the data, anything you don't understand, how to play it, what to look for, just put it in the comments here and I'll endeavour to answer those questions. Good morning, IO Nut. Long time no see, my friend. You're asking what conditions will Kiwi CAD rise with China injecting money and oil going down? Or does it also need stocks to go up? Right. I don't know if I've got Kiwi CAD open on here. Can't say it's one I look at an awful lot. Oh, there we go. There. Don't expect many lines on it though. Oh, look at that. We've got some fibs on it. Aren't you lucky? Still valid? Nope, all blown out. So there we go. I'm going to take that out the way first and foremost. Right. You've got several questions there. Right, the China thing is potentially positive for commodities. So it's positive for both commodity currencies. So it's positive for Kiwi, it's positive for Canadian dollar, particularly on the back of oil and whatnot. Kiwi is obviously a close trading partner of China. A lot of agriculture and sheep, if you like. So it's not just that, but there's a lot of close-knit talk there. So Kiwi is pretty much in the same boat as the Aussie in terms of what it could move here. I think you're looking possibly at this fib. Let's have a look. Let me know if you're not, if that's the one you're looking at. So we are knocking around that old 38.2. So really, at the moment, Kiwi's weaker mainly because of these raised expectations for the RBNZ next week. That's one reason why we're down here, because really this bump up in expectation for a 50 cut is really knocking the Kiwi. I'm personally watching Aussie Kiwi, and as you can see, the same effect there, Kiwi weakening, leading to Aussie strength. So overall, China's still a bit of a hopium trade. Okay, they've done all this big easing, it's got to produce results. If it doesn't produce results, then you're going to see a reverse in those risk trades, commodities and the like pulling back, which is obviously then going to affect your commodity currencies. But as I say, Kiwi CAD is a bit of a funny one because on a commodity basis, they're both in the same boat. I think, though, if you're trading this one at the moment, mate, stick to what's happening at the RBNZ first and then move back to the fundamentals with China and everything else going on in the world. So this one is probably more an RBNZ play right now. The meeting next, whatever day it is, don't know what day it is, 5 days time, the 9th, Wednesday, I think, Wednesday morning. So that's when the RBNZ meeting is. Right, let's know what you're doing in that as well. Are you long, are you short, you're looking to buy, sell, and what you're doing in it as well, my friend. Right, dollar yen. That's topped out. It's come in a bit. Let's go on there. That topped out still at 147. We keep getting these little extensions though. We've had a few of these extensions when the level's been tested since we had the break under. So you really probably should need to make it a bit of a zone, or at least you know what it has to clear if it's going to kick on above 147. It's really got to clear 25.30. If we're trading 30s, 147.30s, then we've probably got a break on our hands. I'm still thinking this level looks good. I didn't try a short yesterday. As you know, I was long from down here and I got trailed out of that. So I was gutted I missed all of that move. Then I tried to be clever up here and lost 25 pips trying to short against that level. I was half tempted to have a go up here at 147, but I'm not too keen leaving stuff overnight with all the Japan waffling going on, the risk trade as well. Although being short this pair, you're probably sitting on the right side in terms of if something happens, Israel retaliates or something like that, then obviously yen will gain. So it's being short these pairs in terms of risk, you're largely on the right side. Obviously, if there's a headline that everything's fine and dandy and all hostilities have stopped, then it might mean that we see the yen weakening on the back of that, the undoing of the risk off trade, the run to safety. But anyway, 147, and I've been saying it for a while, as you know, this is a level where we could really put in a serious top and then maybe have a bit of a range, 139s, 140s, and just have a bit of sideways action while everything unfurls in the US and Japan. But it's NFP day, so who knows? We get a really strong number, yields rally, we could be up through and then as I say, could be looking at 148, 149, even 150s. So I'm not going to trade it into the NFP, but it's going to be an important level for me after the NFP. If we've had a spike up and we're back down below it and we can't get through it again, I'm probably going to try a short. So I'm going to have to react after the event to this one. I'm certainly not going to get into a trade this close to the NFP and run that risk as well. Still very high volatility in this. It's actually gone up. It was coming down as I thought it might do after the Fed. We were trading 12.5% in the 1 month foals. We came down to 11.20s, 11.30s. We're now at 13.21%, have been up 13.67% today. So volatility is coming back into this one quite heavily. So factor that in if you're trading it, because then it's when you see, quick 100 pip swings on next to nothing. In the meantime, we have faffed around this 146.50 area, tried holding it as support a couple of times. We came below. We're just holding it as resistance right now. But again, this close to the NFP, I'm not going to assume the levels are going to do much at all. So keep an eye on that one as well. Euro sterling, as mentioned, I've got my stop now at 83.50 on my longs I took down here the other day. We were trying to hold this 83.50 area. Tried for about an hour to hold this level. Again, this is one of those levels. Let me go back out again. Sorry, just one of these levels where you get a bit of an extension and it held up a couple of times, and that it does go back a bit further than that as well. So this 83, 85 level it was holding. We've now broke it. Now we're down in this 83, 60, 70 area. This is a bit of a line in the sand now. If we get back under there, we're going back into this mess in the low 83s. If we manage to hold it here, then I think we're probably going to stay in another range, but we're probably going to ping around up into this zone and down to here at some point. So I'm happy to stay long and say I wasn't. Obviously, hindsight's a wonderful thing. It would have been a good trade turning short, but if I wasn't long, I probably would have tried a short. But I am long, so I don't like giving up a winning trade. So while it stays up here, it's got every chance of moving back up again. But my stop is going in just below this level, 83.50s now, just to protect what I've made, and so make sure I don't give back too much. But yeah, it's in a bit of a coin toss now what it does from here. Dollar CAD, there's no Canadian jobs today, so it's all about the dollar for this one. Also, what happens with risk and oil and the like. We've held this the bottom of this zone here. We did have that move under, marked a fresh low back towards the end of September, which looked bearish at first glance because we did make a new low. If we'd have held here, then we could have gone on, but we've stepped up back into the zone. The bottom of the zone is still support, so that's given it the impetus to push up. Still got this big area up here to take care of, 135.80s, 136.15, 20. So if we get up there again, that was quite a nice move. That spike we got up to 136.50 confirmed that level again, and that's a bit of an old time level. As you can see, lots of action around that level. So again, if we do get a spurt up here on a good NFP data, that might be a bit of a stretch point. But whether I'd want to give that a go on a Friday afternoon, I'm not too sure. But certainly see where we are next week on that one. Dollar Swiss, I know a lot of people looking at this one. We were talking about this one on the F.A.C.E show, or some of the people were talking about this one on the F.A.C.E show yesterday. It's very contained. Okay, it's staying very tight. It's almost euro sterling like, which makes it a bit suspicious because it's coming through the Fed, it's coming through the risk headlines, it's coming through all that sort of stuff. The S&B meeting, inflation data, and it's not really moving. Okay, so that sort of gets you a bit suspicious. You know, if stuff's not moving over data and all the other events, why isn't it moving? Even just getting, you know, the odd spike or the odd dip and drop and whatever, it's not happening, which potentially suggests that the SMB might be in action. Maybe, and this is just conjecture on my part, smoothing on both sides of the coin, keeping a bit of stability for now, rather than trying to push it in one direction. But I think, again, this is going to be, it's obviously going to be an important level. We've held this 85.50 for a couple of months now. So again, if the data breaks it, if it's good US data and we break it, it needs to hold it. If it doesn't hold it, if half hour after NFP, we've gone up to 85, 86, 85, 80, 86, and we've come back down again, and we're back under, then be very careful if you've been long on that move, okay, because it means we might be staying in this malaise. For the downside, on balance, I think this has more chance of going up than going down, just how I view the price action. So any move back down to 84s, probably going to find some decent buying, but it's really going to take a break of this 83s level, maybe, to get things really rocking down at that 83.30s level. If we're busting through 84s and heading down there, then it's going to keep this trend back in play, or it can mark a very significant double bottom. So plenty of ways to play this one. I might consider trying to buy stop in this one after the NFP. I won't put one in over the NFP, but if we haven't broken this over NFP, but we haven't dipped too far, then I might be thinking about a buy stop, maybe 85, 60s, something like that, just to potentially catch a break if it does go. But obviously, do let us know your thoughts about Swissy if you're trading that one as well. Yeah, it is consolidating before a decent move, and the longer you get consolidation, Gavin, then the more volatile a break is likely to be. You know, if you get a short-term consolidation, then you might get a little shift up. When you see this type, you don't often see this type of price action. You know, particularly in a pair like this. You know, this is probably the longest period of consolidation we've had. Let's have a look at daily even. You know, maybe here, but otherwise we've always got decent moves going on. So just, yeah, if you get consolidation that's pretty tight, when it does go, it usually goes with a good, decent amount of oomph. That's when I like to try break trades to try and capture that. Matthew, long dollar rand. Let's have a look at the dollar rand, see what that's doing. Not looked at this one for quite some time, not since the elections. Broken out of the bottom of this area here, 1790s, busted the fib there as well, back above it though, through this low here as well. Hope you're long down here, mate. Nice trade if you are. Just keep in mind though, it looks like this area here, what's that, 1760s call it, is your trouble spot. Let's just bring that in a bit further. Yeah, so just in there looks to be where your bounce problem's going to be if you're going to move up there. That's what you need to get above, I think, Matthew, if you want it to continue cracking on. So again, just keep an eye on that one over the data. If you test it and don't get through it, you might have to maybe look at taking some profit off the table or something like that. Yeah, obviously, same thing. Commodities are in the mix here, gold and metal, other metals and everything. So that's the consideration. Not forgetting that South Africa is still a bit of a basket case in terms of government policies and all that stuff. So we're always one headline away from something wonky. What else do I need to look at? Of course, got to look at gold, otherwise I'll get told off by Dereg if he's here. And we're still knocking around, still getting up towards that 2670s. So we're still walking the range. As I said, this 2640 is still developing as well. So we had a little pokey underneath it, but I'm not going to hold that against the 9. So this is looking like a bit of the middle pivot zone in amongst this range here. It's a bit lopsided, obviously, but 20 pips from there and 30 pips from there. But you get these little pivot areas. We had it down here. We had a bit of a pivot point. You know, we couldn't get above this, just support just above it. This range here down at, you know, down here 24.70s. So you get these little lines popping up, and it seems to be just intraday support, if you like. And when you get a move under, that's when you get a push down to the bottom of the range. So yeah, it's still looking good for the range. No change there. You know what to do. If you get a break above here, make sure it holds, make sure it clears out that, and it will need to make a new high. So even if you get a break here, 70s, if it can't clear this high, 85s, if we get a bit of resistance in there, then potentially we might just widen the range up a bit, or this level becomes one of these levels, one of these intermediate levels, and the real level becomes up here at 26.85. So just let the price do the talking. You know, you could try a break here, but as I say, even if you don't make a new high by $1, you know, just take a new high, 26.86, 87, 88. Just making another new high keeps the momentum going, even if it's by a couple of bucks. If it doesn't even get as far as that, say it pulls up 83s, 84s, 82s, makes a high there, then that just shows you a bit of exhaustion from buyers, and they're not willing yet to push it through those highs, and that's when you get a bit of a stronger top forming. And from that, you probably get a more steeper pullback off of that. So range trade for now, trade the edges, stick in the middle. Right, if that's all, unless you guys and girls got anything else you want to have a butcher's at, let me know, or we will call that a day for today. Should have Mr. K-Man back next week, though he might just be popping in briefly. Still got some things to do on the personal front there, so obviously wish him well for that. Thank you, everybody, for coming to the Flow Show this week. I hope you've enjoyed yourselves. Certainly was good having a couple of guests on, Gregor, Ryan from Peak Suite, and Michael Brown as well. So we'll look to do those sort of things again. Trade safe. Don't blow any good profits this week trying to mess around on the NFP later. If you've had a good day, go and have a beer and come back Monday and just watch the NFP with a packet of popcorn. Have a great weekend, everybody. Have a safe weekend. We'll see you all next week.